Good evening, traders. It's Mark here from the Day Trading Room, and currently 10 minutes till the market closes. So that is, excuse me, 7:51 London time in the evening on Wednesday, November the 3rd, and it's Fed Day today. Interesting day, just chaos on the markets, and I'm going to do a separate video about today because there's a lot of things that I want to document regarding Fed Day. I think it needs its own video in its own right. A lot of action today on how to we can sort of sift through all the noise and try and get just one or two good setups out of it, because Fed Day is a funny day. It's a sort of day that you can either get killed on or you can make some good money. But I want to run over Monday and Tuesday's trades in this video. In front of the screen now, you've got a clip from my Sunday night video, which was showing the levels on the 5-minute Dow cash chart, and I was saying how we were pivoting between the 11,100, 11,000, 11,200, and you can see the lines I've actually got in. I've got here at that high there at 11,247. Ignore the decimal places. That's just we're not talking to the point here, but we're just talking generally. And then there's some a good key level there at 11,169, another one at 11,151. So that was the video that I put up on Sunday. Okay, this is my chart now. So Sunday ended here, just there. So that's what we had on Sunday. We had all that, and I just wanted to point out quickly before I run through the trades how useful having key levels marked on a longer time frame chart is. And if it's something, one thing that I really would recommend, it would be to do this, because it just gives you that heads up, that little awareness of where you're trading relative to previous days, because context of the market position is so important. You can zoom in on a 1-minute chart, but I'm fine. You can zoom in on a 100 tick chart, whatever you're doing. But if you're not taking it in the context of where it is in relation to previous day's trades and how close it is to key levels, then it's meaningless. You need to be aware of where we are in relation, to the previous few days trade, which is why I have a longer term chart always up on one of my screens. But important thing is these levels are exactly the same. Anything I've done different is as I've highlighted this in bold since we bounced off here. But just want to point out, look, that level there, if you've known that in advance, how handy is that? I look again, what else is a good level? Where did we bounce on this pullback on the Monday? A key level. What sort of range did we stay in? We stayed in the same range that we did on the prior Tuesday, up to that 11,169. Bit of a poke above, but that was generally support. When we push lower, where did we pause? We paused between the yellow and this grey level here. When we push lower, where was the low of the day? It was at the level. I mean, this stuff, it's so important to have on. The high and low of the day we already had. I mean, if you go into the day's trade knowing that potentially the high and low of the day are already going to be marked on your chart, and how many levels have you got? You've got 1, 2, 3, 4, 5. Okay, you've got 5 levels of potential range, and if the high and low of the day is going to be one of those levels, you've got a great head start. And even looking at Fed Day's trade, which I'm not going to run through today, but you can see how the levels have been adhered to. Great one there. Again, the spike lower, right on that 1100 level. So something to bear in mind. Really, really worth having those levels on your chart if you're not already. Anyway, let's get down to the trade on Monday and Tuesday. Okay, Monday. Here's Monday's trades. Great day for traders on Monday. Plenty of action, loads and loads of good moves. Just 3 trades for me, all winners. Just picking my trades carefully as usual. What do we do? Well, as I mentioned in the last video, this opening drive trade where I would wait until I saw some tape strength or weakness and then jump on, as I've said, isn't as clear cut as it used to be. So I'm bringing that back a bit. I'm scaling that I shouldn't say scaling back. I'm taking it away from my trading setups at the moment. It's still there, and I will use it when it's back in play. But at the moment, it's not yielding as much, and it's not as clear cut. And I don't think there's as much of an edge as there has been in the last month or so, when I'd get probably 10 or 20 ticks straight off the open just by reading that. There's been a bit of fake out action going on, so as a good trader, you need to know when setups are working, when they're not, when to pull them out of your arsenal, when to put them back in. What weapons, if you like, to use for what battlefield, and they haven't been working. So I've been adjusting it slightly, and I'm either waiting for a fake out and then a push in the other direction, or I'm waiting to see the opening drive commence, and then I'm looking for that little pullback to look for the last squeeze, or I'm waiting for the opening drive to flush and fade. So rather than looking for the first push, I'm waiting for the secondary trade that comes off that. So yeah, we had this push. It was a lot of grind action here. Very pleased to stay out of that. And because I wasn't using the opening drive trade, I missed this push, and this was up to the 11,200 cash level, which very important level. So the first pullback I didn't take. It was at the resistance level. It had pushed quite a lot. Paused. There was a little bit more on it, and okay, you probably could have got it, but it wasn't for me because we were at that resistance level. Get some data coming out at 2 o'clock London time. The clocks have gone back in the UK, so we're slightly out of sync. It's normally a 2:30 open for me, 2:30 p.m., but it's now a 1:30, just for 1 week until the US clocks go back. So data come out at 2 o'clock, and great little setup this. Wait for the spike. You can see there's loads of bullish sentiment to the market. We've driven up hard. We've consolidated near the highs. Very little pullback before the data. So all we need now is for the data to be taken as positive, and that's what happened. We pushed up, we pulled back. This is the important part. We pulled back to the level that we'd broken out from and consolidated. So you've got 2 or 3 minutes of consolidation that cannot push lower, and there's a tape guy there stepping up, holding the bids. It's a great place to go long, and your risk is really, really small because you're taking a long there. You're waiting for this to show willing and to hold, and it does. There's your long. Your stop is going to be under here. Now I wouldn't use necessarily a stop right under there because you might get wicked out. You need to use it more of a case of if it does go under there, then you're ready on the sell button, and if it starts heading here, you're definitely out. If it starts holding under here, you're out. But if it just pops under with one little 1 minute candle, then that's acceptable for me. So, but still, the risk is very manageable. It's hardly anything, and we're looking for that pop back up to the level we had on the 5 minute chart, and that coincided with our 1,000 tick reading. Those were my two ideas. I was either going to come out at that level, or I was going to come out at 1,000 ticks. Happened to coincide with each other, so I'm all out there. Coincidence, that's the way it is. It would have been nice if we'd have blasted through and got a little extra 10 ticks out of that, but we didn't. But that was a good trade, and it was worth a lot. So that was that one. The next trade I did was this is a very classic pattern. When you've got a good push up, you're always looking for the market to move in cycles. So you've got a push up, gets a little bit stretched, and then it just starts to cycle down, and then an expectation is for it to have another push up. Now it may double top at that point, or it may just take out a few stops and then come down. That's a different setup completely. But generally, most people are expecting, when you see that sort of move, a cycle lower and then a push higher. That's a trend, trend, pullback trend. That's what a trend is all about, and that's what bulls are looking for, and that's what they're looking for on this Monday. Good push up. They're waiting for this cycle here. This is the cycle. Forget about the noise. Just look at the movement. Just consider it as that. Just a normal pullback in a trend. Waiting for it to cycle down, and then they're looking for a push higher. So all very well so far. It cycles down, tags the VWAP, tags that support, starts to push back up. Great little trade that. I didn't take it, but it's a fantastic setup. One to definitely use. Works well. Getting that first pullback on the trend, looking for that push, that secondary push up. But more importantly, and this is the one that I got on, and one that that works really well is the failed push up. The move that everyone's expecting doesn't happen. You get that little run for the door, and if you can time it right, you can make some good profits very quickly. So this is what happened. All very well. The bulls were all very happy. The guys who bought back here and here, all very happy. And yes, a longer little cycle, taking 30 minutes, but that's not not unusual. Started push back up. Okay, great. Little push back down here. Okay, that's fine. They're just waiting now for it to burst and get back up again. When it comes back down and starts to test the point that it bounced from and this level, there's a little bit of apprehension from the buyers, from the bulls, and they're thinking, okay, that drive should have taken us up. Okay, maybe we're going to push back up, but they're a little bit more nervous, and that's always what you got to be thinking. Who's on the other side of the trade? So I'm now looking for a short opportunity, but I need a trigger and I need manageable risk to take that short. This little segment of candles here confirmed the short for me. When it came down and tested that level, the ticks, okay, were starting to push lower. They weren't holding at zero. We'd had a push up here that was relatively feeble. That should really be taking out, starting to look at highs. It didn't. It pulled back. It starts to pause. It tries again. It holds too long. This is too long for the bulls. This sort of consolidation near the lows after this cycle down is too much for them, and so it's worth a short. You can take the short here. Your risk is here. That's it's a fair bit of risk, but you've got to really do that because this could chop in this zone before it turns. And again, it is a counter trend move, and it's a bit of a quirky setup. It's not textbook stuff, but then again, trading really isn't. Trading really is about thinking about who's caught out, who's going to get done over on this, and all that sort of thing. So there was the short. What am I looking for? Well, I'm looking for 1,000 tick reading, usual stuff. This came down and gave us a little spike, so I've got a first scale out here. Probably didn't really need to get out of scale, but I was watching that, and as we moved so quickly, I was pleased to take a quick 20 ticks on that. With some of the position, and then it sort of consolidated, pushed lower, and there was our final exit on the 1,000 ticks there. Not much after it really. Good little trade that didn't have to wait long. Risk very manageable. It's probably 1-to-1 risk. It wasn't great in terms of textbook risk reward stuff, but that's the way it is sometimes. So yeah, a couple of good trades on there. Running out of time quickly, so let's dash over. This is another great setup for me. Didn't get involved in any of this stuff, nothing to do with me. This was the low of the day. We came down to the low of the day in the last hour or so of trade, hour and a half of trade. Broke through, fine, all very well and good. Continue breakthrough, which is what you want to see. A good push, a good solid move, good 25 tick move with no pullback. Good low tick reading, flush them all out. Get a little tiny pullback. It's 3 minutes, that's great. Look how long it takes. 3 minutes we did 20 ticks. 3 minutes we've done probably 7 ticks. Ticks go back, tick index goes back to 0. Let's not get confused between the ticks. Let me just move that over so we can see what's going on. Tick index goes back to 0. Fantastic. There's the short. Bang. What you're looking for, little new low spike. It just paused here. The tick didn't go to new lows, so that's me out with a decent chunk of it. I'm in from here. I'm keeping a position. I'm going to come out. I can afford to do that because I've scaled. Got that second rollover. Got our 1,000 ticks out a little bit early. 25 or so ticks. There was more in it. Shame I didn't hold on for the rest of it, but that's trading. Happy to take that. Great day for traders. Very quickly, I've only got 30 seconds left, but that's all I need to talk really about Tuesday. Awful day. Consolidation in here. I think I was waiting for the vote results and for the Fed. Consolidation in here. I drew these lines in. I didn't want to get involved until these were penetrated. This looked great. We started to push lower. I thought there was a potential for a gap fill. I took a short there. Didn't work out. Curled back up. Stopped me out. 11 tick stop. And that was it, done for the day. I thought, I'm not going to give back any more profits. So from the prior day, which was a fantastic day, real chop and slop all day long. Very tight range. Very low volume. There was no trades. I didn't think there were any trades. So save your ammunition for Fed day. Good trading, guys. Look out for the Fed video.